Hey everyone, this is Jack speaking. Today I'll be talking about important mistakes to avoid in case you're new in the crypto world, and somewhere in this video, two of you who have subscribed to my channel are going to get £100 each. The giveaways are currently being paid only in BCPT or Block Mason Credit Protocol, whose price we're pumping. In case you're not with us on it yet, please pause this video and watch the 8th video back from this one called BCPT BTC, our first of many epic pump missions. You recognize it easily by the Hitler style mustache I have on its thumbnail. It is a long-term ongoing crypto pump, or call it popularization of the asset if you like. Once you watch the video, you're going to realize the magnitude of what we do and join us, or don't realize it and miss out because in the long run, no other cryptocurrency is going to give you the returns which this one is going to. The first mistake that comes to my mind straight away when it comes to crypto is never open short positions. For the really new ones in the trading world, short position is a sell position because its limit is the zero, while long position or the buy position has practically no limit. I've made the mistake to start shorting myself during the rally at the end of 2017 and I suffered the consequences, but clearly I'm not the only one. I've read an article about a crypto millionaire who made the exact same mistake when he was starting. Well, we all learn from our mistakes and suffer the consequences from them, but each one of these mistakes is a valuable lesson to be learned. Another mistake newbies recently make is trade or invest against stablecoins, and I will explain why this is a mistake. While trading or investing against a stablecoin gives you a momentum security that your portfolio is not going to shrink a lot in a very short period of time, in the long run this definitely hurts your portfolio. Let's take our BCPT BTC pump for example, but before this let me give you £100. If let's say I started this pump in November last year, just before Bitcoin's huge jump, and I made the mistake to target another trading pair like BCPT USDT for example, this is what would have happened. The value of the USDT itself would not have moved up at all as it is a stablecoin. This means it has almost no growth potential of any kind other than its USD value power of purchasing. And what this means is that if the United States dollar becomes stronger, USDT is also going to become stronger because it is tied to its value. Now on the other hand, because you are trading against Bitcoin, and Bitcoin's value jumped about 5 times or so since the mentioned November, so does your portfolio jump as well. I'm pretty sure that many people think that if the price of Bitcoin goes up, the exchange rate of BCPT BTC is going down, which has absolutely nothing to do with reality. We're simply exchanging one asset for another asset, no matter what the fiat value of both of these assets is. Same would apply if we was to express fiat currencies with how many potatoes they can buy. If you was to exchange, let's say, United States dollar against British pound, it doesn't matter that United States dollar can buy, let's say, 100 potatoes and the British pound can buy 130 potatoes. Why? Because it is how many units of one of the assets is being exchanged for how many units of the other asset. And the purchasing power of both of these assets is completely irrelevant in relation to the exchange rate between the two of them. Damn! I've always wanted to give an example with potatoes. Another mistake crypto rookies make is not building a solid base. Knowledge is such a treasure which cannot be stolen or rented out. So building such a treasure is the first and foremost thing any beginner should do in case they are planning any investments. But many of the new traders fail to do so. Only by going through word of mouth, the newbie often invests in assets without having the proper knowledge of the market. This type of investment often leads to loss of funds, and in some cases the entire portfolio can be lost in the blink of an eye. I think it's time to go and help somebody who needs it the most. So he knows that he's gonna get something, he just doesn't know what is he gonna get yet, and what you get is 250.
Thank you very much, sir.
You're welcome.
Have a very nice day.
You too. I hope I made
God
your day,
bless
yeah?
you. Yes, sir, you have. Very much.
I hope so.
God bless you, sir.
My pleasure.
Thank
Now
you
you're
very
happy,
much.
yeah?
Yes, sir. And I won't
So
be
good.
out here for much longer.
That's nice.
Thank you very much. Yeah.
Feel free to hit the like button as it helps me tremendously to build this channel. Also, if you don't have a portfolio but you want to start building such, or you do have a portfolio but you're not happy with your current broker, have a look down in the description. The exchanges you see there are trustworthy and they charge fair fees. Depending on which one of them you decide to go with, they might even give you a welcome bonus. Or you can go with all of them, as I always advise traders and investors to use at least a few exchanges for an extra layer of safety. Another mistake crypto rookies make is being very impatient. Patience is one of the strongest weapons anyone can possess. For any returns, you need to have ample patience. After making a solid buy at the bottom, agitation kicks in and people usually check price variations every minute expecting it to skyrocket. The stress this causes you override the sane and logical emotions, making many new traders vacate great positions by selling early. And as you can imagine, not long after they let go of these great positions, the market usually goes back up, making them regret the decision they made. Another very important mistake is panic selling. The crypto markets tends to touch the rock bottom prices within a fraction of a second. And hence this creates a serious panic amongst the traders who tends to sell their holdings without a second thought. Therefore, a trader needs to be very patient and save himself from any panic selling. I thought I had another $100 to give. Okay, I'll find them later. You get £100. Another common mistake is not building a clear strategy. Seasoned traders with their experience often build a strong strategy which helps them trade safe during bearish trends, but newbies often fail to do so. Some of the experienced traders even share their strategies, but nobody seems to understand them, not to mention them uploading a video of their improved, at least 4 times more profitable strategy. Without having any goal or a strong strategy, no success or a profit can be minted. Unless it is a pure luck, of course, but luck doesn't last long, and next time the markets are going to get back these luck gains, plus even more, unless you have a strategy. This needs to be given the prime focus before investing in any asset in any market. Another mistake crypto rookies make is getting scared of market volatility. The crypto market is often termed as volatile as the price fluctuates every second. The experienced traders are used to the market behavior and upon their knowledge and past experience tend to make profit even from the dump itself. On the contrary, the new traders get tense with every dump and may take improper decisions scared of the market volatility. Another mistake crypto newbies make is FOMO trading and FUD. The most happening mistake the new traders are making is the FOMO trading and FUD. FOMO generally means fear of missing out. Here, whenever the market is about to shoot up, the trader, having the feeling that he is missing an opportunity, grabs the asset without having a second thought. In other cases, FUD is abbreviated as fear, uncertainty, doubt. It all happens when some negative rounds of news or blog spreads over the market, which has a negative impact on the traders. Last, but one of the most important mistakes is using leverage. I put it last because I talked about avoiding leverage in many videos already, so I'm going to spare you the details, but bottom line is using leverage is an inevitable bankruptcy on a regular basis. Thank you all for watching this video. Don't forget to subscribe if you want to have a chance to catch a giveaway yourself, and I'll see you next time. After making a solid buy at the bottom, agitation kicks in and people usually check the price variations every minute. Hi.